And I'm live. What is up, YouTube? This is Dre. Yeah, we're going to talk about trading stocks today. We're going to talk about how you doing. And I'm going to, of course, tell you how I'm doing myself. I'm telling you my damn self. Now, I had a lot of problems going live the other day, and it totally crapped out on me. And come after the fact, I was still live, even though it said I wasn't live. So I'm kind of, if this video messes up, I guess I'll just keep going, talking like no one's there. I'm also live on Periscope. You can check me out. Follow me on Dre Trades. Yeah. And then I guess I don't know how that works really, but I know I'm streaming right there on Periscope, and Twitter's Dre Trades, and Periscope owns Twitter, and blah, 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 blah. Okay, so I'm just trying to make sure everything is all right. Yeah, I'm all messed up here. All right, so I got Goldman on the screen. Yeah, I got Goldman on the screen. I don't know why I got that up. Let's see what the hell is it. Yeah, everything's all jacked up, man. Goldman looking pretty good on the down market. The Dow was down 97 points. Let's pull up the day. And I made a great trade in this, man. You remember the breakout? I showed it to you. I can't remember that candle right there. Let me go ahead and just close this window so y'all can see that a little better. And we'll just go ahead and close me as well. No, you don't want that. You want this. There we go. You don't need to see me. See that camera? Yeah, that candle right there. It was a perfect breakout. I entered somewhere around the top wick of that, and it's been trading pretty good. It backed off some. I changed the trade a little bit. I had a call spread of 215, 220, right? Had 10 of those bad boys on there. And I kind of I was like, anyway, I wound up turning into an iron condor where I sold the 205, 195s, right? 205s here. Maybe I can draw it out for you. Let's get rid of that one. I'm totally not ready for this video. Yeah, so here's the 205, 195s, and then I sold the 2, and this is the one I'm afraid of. I'm not really afraid of it penetrating that. I'm afraid of it penetrating this. I sold the 225s, I think, and the 235s. Yeah. And for some reason, I think it's in 36 days out. I just think it's going to catch traction, and then you start seeing these big, large candles. And I think it's up $1.33 today. Yeah, it's up $1.33, and the market kind of sucks. So what happens if the market all of a sudden turns and do good and banks rip? You know, when the banks rip, they rip. Okay, that'd be up 3, 4, 5%. And Goldman had the best report out there. So these guys made a lot of money. So this one I think is just gonna rip. And so I'm kind of worried about it. I guess I'll, if it happens, I'll move my put side. I'll kind of slide it up a little bit and see if I can capture some more profit. Maybe just buy a straight call or another call spread on top of that to kind of save that position. It's funny, I just put it on. Now I'm already worried about saving it because it's really good. It's safe. It's a safe position. What else, man? Netflix. Oh my gosh. And I knew it. You go back into my videos, like I always say, and I had several videos, but one of them I was really just bashing this company. And I said, Netflix sucks, man. It sucks. And it finally, they realizing it sucks because they only got half the subscribers. There's half the subs that they predicted. A very tight range right here that has been trading. This is a 4-hour chart. I'll bring it to the daily. I didn't bring my drink with me to the thing. I'll bring it to the daily, tighten that up a little bit. And you can see this was the range for the last. Man, when was this? January 19th, just a tight range. It finally traded out of there. Volatility is going to spend. Basically, I am betting that this thing goes down more. It's not even going to try to go up. It's not going to do it. So I've been just trying to look at some kind of trades. What could I do? And I had, it was funny because when it was trading last night, I was trying to figure out how could I capture the downside, but damn, puts on it was so expensive. Put spreads was expensive. And I was like, I had a bad day or two with Amazon, and I was like, I don't want to lose. I don't want to gamble. And I know I felt good about it. I felt real good, and I was like, oh, I don't want to gamble, lose $1,000. And sure enough, man, I should have put those trades on. Isn't it always that way, though? Isn't it always when you're feeling so confident and you don't put the trade on, it goes your way? But if you're feeling confident, you put the trade on, it doesn't go your way. So that's what I was kind of experiencing and feeling, Just making sure I am. Okay, looks like I got a good stream still. So I'm like, anyway, what was I talking about? Yeah, so I want to put on I'm on the 36 days out. What I really want to put on, because I know this thing, it's done. It's done. Come down to December, something like that. And am I on Netflix? Yeah. And maybe look at a put spread right from here, buy vertical. The 320, let's say, I don't know, 20 delta. Let's go to 275. Yeah, that's $1,600 that's going to cost you, and that's just one, so we can analyze that and see what it does. You see, I got some other trades in the analyze tab, and oh man, what is going on? That it's not. Yeah, let's tighten this up a little bit. Sorry, my computer's not drawing. It is not drawing. There we go. Sorry about that. So here we go. You can see it if over here that kind of trade will bring you in $2,890. $2,890 is my max gain. And then down here $1,610. So of course it's $1,600 to possibly make $2,890 by year end. And that's if you think that this thing is just going to continue to go down. I do. I think this is just the start. Look at how it broke out of that range. There's nothing. I remember Starbucks did the same thing, and there is nothing that they could do, in my opinion, that's going to just start trading this thing back up. I just see it slowly zigzagging down, and possibly testing this low right here. So we had the 275 on that trade. I want to put that on. Look at the stochastic done flipped. Big volume on the down candle today. I just think it's done. I think this is finally it. I mean, Disney, as we get closer to December, Disney is coming out. These guys think that they had the pricing power. What is it, $14.99? For subscription. So you got Disney coming out $6.99. They're gonna have most of the movies. You're paying all of that money on content that's just people just gonna watch one and be done with it. And you still gotta buy more content, create more content. It's costing you a fortune. Disney movies just make money, man. They're just sitting on the shelves. They put it out there. Boom, you're gonna watch it, and it's only $6.99. You get two Disneys for the price of one. Now, I do think eventually Disney will raise it up. Once they get everybody on board and kind of crush Netflix, and I think that's their plan. Crush them, get them out of the business, then jack up the prices back to $14.99. That's their plan. So I just may put on that trade, but I've been putting on SPX, running the SPX condors. I've been condoring my ass off, because I was in Amazon and I made a whole bunch of money. So that's why the title of this video is Keep My Money, man. I made this little run right here, man. Thousands of dollars, and I wasn't quite ready for this action yet. I thought it would actually hold near its highs until earnings. But Netflix is just totally crushing the FANG type, high growth type sectors. What is this? 1963. Damn, down $28 today. I wish I would have had a put. So look at Facebook. It's giving out up. It's right at the 200. So we got Netflix, Amazon, Google. Yep, look at that. Everything is just giving it up because of Netflix. These stocks are not Netflix. Okay? These are not Netflix. Netflix sucks. You need that Google Maps. You need it. Right? You need to do a search. What are you going to use? Google. You want to buy something, you participate in Prime Day? Amazon Prime? Would you cancel your Prime? Hell no. You want your stuff in 2 days. a day even. And then you want the movies, you want the books, you want all that other stuff that they give to you. Prime is valuable, okay? Now, I'm waiting for Google. I totally think Google, especially Google Maps, just charge us for it because you're going to make a whole bunch of money. Nobody's giving up Google Maps. It's the best thing on earth. And also, make Google Maps a device that we could put on our windshield. We don't want to, get it off our phone because we want to use our phone for other things. Why can't they have a GPS out there that's Google Maps, run by Google, right? Put that out there. $200, $300. We will buy that shit. So I don't understand. And charge us for the data. Charge us to let us know what the traffic is doing and the go arounds and the reviews and all that stuff. But it's free. It's free now. Or Google Plus. By the way, you heard it here. You heard it here first. Amazon Prime. I guarantee you. I don't know when. It could be years from now. There's going to be a Prime Plus, like a Plus membership. So Prime is 120. It's going to be a Prime Plus. Yes. 140 or something like that. And then you're going to get some extra stuff, movies, blah, 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 blah. I just think they're going to split that up because we get so much for the 120. Instead of them keep raising it, I think they can split it up. Just like they split Prime up for, you could buy monthly, semi-annually, monthly, annually, weekly, whatever. I think they're going to do the same thing. Or they're going to call it Prime Plus or something like that, right? Yeah, man, that's the market. So UNH, this is another trade I did. Come on, there you go. United Healthcare. I had generally I don't place trades when earnings are in the window, but it looks like these guys reported this morning, and I totally botched it. I had a trade on. And I had no idea. So I'm like, oh my gosh, I can't believe they reported. If from what I understand, it's a good report. I didn't really get into it. And I think it's just down, maybe a little overheated because it's only down 2%. And healthcare is the best thing going right now. You want to buy some healthcare. So I think this is a buying opportunity. I think it's just a pullback. So I'm still in the trade. Yeah. I got condors on this as well. Yeah. So I forget my strikes, but I'm in UNH and in for the long haul. Look at the weekly on this thing. See that? It's just a breakout, little consolidation. I think it continues to go higher. Oh man, what else did I jump my butt into? So IWM. I like trading the rut. All right, it's positive today. Whoop, 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 whoop. Oh shoot, I like trading the rut, right? So I got crushed. I've been trying to pop the bottom of this thing, or I should say catch the bottom, and oh man, I've been failing at it. I think right here, and I did catch the bottom. I got 15 calls long. I stepped myself up like 5, 10, whatever. So I'm up to 15 calls in the IWM because here, let me zoom out real quick. Let me show you what I see. Yeah, see that? I just see it catching up to like the Qs. I see it catching up to the Dow, the S&P. I don't, banks are doing well. So that's the country, So I think these are behind, and I think there's lots of room to run. So I've been liking that. So I've been trying to catch the bottom of this thing, man. Just like, and not any good. It's gonna have to break out of this range right now. Look at its overextend. Look at that 9 weight, well below the 50. By the way, this is an hourly chart, so that's just the 9 moving average on the hourly and the 50. Look how far extended away from it. We're going to get some kind of snapback. Anyway, so where was I? Yeah, I think it was here. No, here. You can see I draw my little lines and it bounced off there. And I think this was it. And I caught it, man. I made a nice little profit. Then it came down, still was profitable, going up. And I still believe in the trade, right there. And then boom. I'm like, all right, it's right back at the line. Then boom. Oh, shoot. Let me get it back to even and I'm out. But I'm keeping them on. I think they're 30 days out. I want to try to play the bounce here. But you can see that it broke support kind of. But look, it came right back. And now it's up on a day that the market is down. The Dow is still down 99 points. S&P down 2. The Russell is up 0.23%. I call it the Russell. I'm looking at, the Russell 2000, the ETF for the Russell. So that's good, because I think that once the market turns in general, this will turn. And the IWM can run hard, okay? Especially being down like a catch-up trade. So that's my play. It's just weak, man. Oh, man. But that's my play. So you can see this one is in a range, and hopefully that's a rejection of a failed breakout right there. Because that means it's going a lot higher. That means it's going to reverse and just take off like you're going to wish you was on. Wish. Anyway, so I'm going to stay long those calls until, I don't know, man. I don't even know. I don't know. Anyway, so there's my IWM. I got the rut. I got iron condors on the rut. Okay, so I don't know the exact strikes. Let me see if I can look at my analyze. Yeah, this is it right here. That's it, man. That's a live trade you're looking at. So I'm risking 12.20 to make 280. Here's my deal. I get out at 25% of my max profit, and then I redeploy the trade. Okay, so 280, right? I only got one of these on. 280, times 25%. So I'm only gonna make $70, that's it. Maybe I'll review it. Yeah, $70 and just redeploy it and keep making that money. Hopefully I make it in a couple of days. And I'm just gonna, I was buying calls, and I still got calls. But I was playing aggressively, and I want to lower my aggression, okay? Because sometimes you hit, but you a lot of times you miss, and I don't want to be missing too much. That's why the title of this video is "Hold On to My Profits." I want to hold on, but as you can see, this is a good trade, right? When does these expire? August 16th. If you look at the gray, I think that's the standard deviation, right? And I'm in there. I'm in the window, right? So just give me $70, especially if this starts to go up, which is perfect because this trade is a positive delta, 2.5 delta. So start to go up, and I can make some money off of that. Closes out, boom, I redeploy the trade. Might even bring the short side, the put side, closer to at the money, not, maybe 25 delta or something like that, or maybe really spread out that wing so I can get some good oomph, because I really believe the trade. I'll skew my trades to my beliefs. Some people just put it on regardless. Hey, I'm selling 20 deltas. I'm selling 20 deltas, 20-point wings every Thursday or some crap like that, and they do it regardless if the market is due for a snapback or whatever. So if it's like down really hard, I want to make it biased. I want to, make it, trying to draw a condor, like a bracket, where it's longer up here and shorter down here, because I believe that it's going to go higher. But right now, it has to prove itself. The Russell, you look at the 50, right? This is the weekly, so this is real slow. The 50 week, man. Look how it's even going down now. Okay, let me clear all these drawings out for you. It is going down, and look at the 9 going down. There's no crossover yet. The stochastic is already starting to go down. It's even trying to cross over right there. So it's bearish. It's bearish right now, but I like it because it's just the catch-up trade, And I don't think it should be this bearish. It needs to break out above here somehow, above that line. You can see a little cup and handle, kinda cup and handle-ish. Not really, but it kind of looks like that. It's holding on. It keeps knocking on that resistance, and I think eventually it'll bust through. So today is a good sign. Being up point now is 0.16. Being up 0.16, it's better than being down like the market, so Yeah, I'm long the SPX, the RUT, the United Healthcare. Oh, you know what? I was looking at Union Pacific. They reported today way better than CSX, which was down 10. I was looking at CSX too. See something here. No, I don't have no trade on. And you can see here yesterday, you're looking at the daily, right? Look over here yesterday, that big down red candle. Just, look at the volume on that too, man. It's back. So they thought, CSS is no UNP or vice versa. So it's already back and then some. So look at all these people that got out. They should have just stayed. CSX got some problems. UNP showed them that because they're higher than even when before. So not all companies are the same. Let me see. CSX is down another percent today. It looks like Netflix, because they was down 10. And this is what I think is going to happen to Netflix as well. So see, because look, this was even trading in a tight range, and then broke down, right? And then look, it's going lower because, these people got to get out. Any holders, these people are holding the bag. Eventually, they're gonna be like, "Oh, this sucks." They're already down 10%, 11 now, and it's just gonna go down. It was a volatility squeeze up in here, and boom, it's starting to expand. So these guys gonna get out, and I think it goes lower. Where could it go to? Somewhere around here, maybe 67. Another couple of bucks, and then maybe you could pick it up. Let's bring up the monthly. Looking at the monthly, it just looks like it wants to go even lower. Man, but I think it is the start of lower. Just like Netflix. I got to place me a nice long-term trade on that. Let me see how Disney's faring out to be. Disney, it is down 1.32%. So Netflix got, it's got the whole market down. It's just... the whole thing just down. It's crazy, man. Crazy. Yeah. All right. So, what's going on? You got anything you want to talk about? Any stocks you want to talk about? Even if you missed this live, just go ahead and put it in the comments, and I'll come back with the next live. Yeah, and talk about what you want to talk about, because it just makes. It's just that way. Yeah, there's me. Yeah, just put it in any comment in any video, because I get them all, I read them all, and yeah, I'll talk about it. I'll talk about it soon. Next video, first thing, it'll be even the first stock I talk about. But it would be better if you was just on live, because then we can conversate. So I would rather conversate. So anyway, and that way we can say, hey man, what you doing? Hey, you like that? But look at this. Yeah, Disney is still great. It looks like it finally wants to just give back some of the gain, and I don't know, is it just because it's toppy, or is it because it's Netflix? It's a little bit of both, but to be down only 1.32% is not too bad at all. Let's look at the Dow is down 0.3, and look at this, making a comeback, man. Let's look at the ticks. Let me bring up the minute. The minute. Let me see, where are we? Yeah, still gotta fix my chart, because it's not showing me. There we go. There's my day. Yeah, we just had some higher ticks. Look at right here, man. The market was just getting crushed right here. But the good news is those are 600, no 1,000. 1,000 ticks. None to be found, and that's gonna be right here and right here. Okay, so no extreme ticking. So sell-off is just, it's nothing too serious, Look at the VIX is down, just got down 1 penny. Woo! Yay! And look, it came down hard from 1448. Wow, this lost 50 cents like that. Look at that. Just boom! So let's see. Well, try to draw some kind of trend line. Let's get rid of that one. How about this one? Yeah, see, it kind of might have broke that. That's a short trend line. It's only a 5 minute. But yeah, it might have been. We could be turning. Oh, did we look at Amazon? We talked about it real quick, but damn, look at all these lines. You could tell I trade this a whole bunch, right? You could tell I trade this a whole bunch. I got lines all over the place. Like, what is going to happen to this stock? And right now, that looks extreme. I got to move Periscope out the way so I can see. Damn. Wow. It came right back into the range down here. See, look at that candle. That's the hour candle, and it totally, make sure I got the right charts up. Candle trend. That's a beautiful bottom candle, so it's probably actually a good time to get in, especially approaching earnings. I wonder if I can lotto play this thing. One day. Yeah, look at these daily options are still expensive. I mean, meaning, I'm going to say daily. It expires tomorrow. Today's Thursday. These expire tomorrow. So I think this could be the bounce right there. Kind of hit that support. Beautiful candle right there. Just even though it's a little early because the stochastic did not turn up. The average is still kind of going down. I'm just really basing that off of this candle right there and the support range right here. Okay, so, and you can see that right here. See this congestion. And I think these are the guys that's buying it up right now. It's kind of hitting that and trying to go the other way. But the market is, it's just weak. Twitter. Oh, shoot, yo. Oh, man. I own a lot to Twitter, and I've been buying it on the way down. And what's disappointing, it continues to go down. And I'm like, okay, my position is way too big now. I can't buy it no more. Twitter, you're going to need to start going up, okay? I need you to go up, all right? Oh man, I'm long a lot of calls on this thing. I really, really love this. Oh man, I don't like that pink line now. I really, really love this weekly. I love the weekly. It's like a cup and handle formation. And coming into earnings, stochastic crossover. I like the monthly. The monthly is real beautiful. Look at that, man. Look at just this a nice smooth cup, and it just goes up. And then now it wants to handle, right? So beautiful, beautiful. So this thing, I think, only goes. I got my range higher. I could keep that little thing up, and it will be in this area to come. I mean, look at the candle, right? Everything is just beautiful right here. Beautiful. So I really like the monthlies, and over the week, these last couple of days, this has been up. It's been flattened up. It didn't do any. I'm like looking at it saying, wait a minute, no, it's not up. But open, yeah, this is the yesterday. See, it kind of hung in there. This day was down. This day was up, though. I think the market was down that day. Let me see. I'm just going to pull up the Dow Jones ETF. Yeah, see, its market's been doing one of those. Look at that. Perfect. It's like the top half of a circle. Let's go back to Twitter. TWTR. And look at, I don't know, man. Take back everything I just said. Take it back. Take it back. Anyway, look, I got a little line drawing here. See, it broke and just broke hard. So this, the next couple of days is not looking that great, and it's Netflix, man. Just being top of the market. I'm surprised it was holding up, but here we go. Maybe this is the bottom. This is the move. This is the pullback that you've been waiting for. All right, let me see. So, like I said, go ahead and just chat in the comments and tell me what you're trading. Put it down, and let's talk about it. Because when nothing comes up, I'm just gonna end this video. Now, remember, if you want to go, can't pull up YouTube, even though you can. I'm on Periscope live right now. Anyway, so let me know what you're doing. So I got this channel. I show you what I'm doing, and I made a beautiful I mean, Amazon was one of the greatest trades I ever had, and I just caught it at the right time. So, yeah, don't want to lose it. And I think Twitter is going to be the next best trade or the best trade. I used to play Twitter in the past. Twitter story. And over the past earnings, you could see them. I'm looking at them right now. This is the monthly, without even looking at the these things below, which is telling when earnings. This month, earnings. I guarantee you that was earnings. This candle, earnings. These big candles. Oh, excuse me. Probably be earnings, because Twitter is just always seems to disappoint. Never really goes up after earnings, and it might do that now. But I think this is the turn, just because it's saying it in the charts. Also, when the earnings has been, the air comes out, it seems to find its way back. Unlike Netflix, it's not going to find its way back. And so it's coming up. Remember when Twitter first came out? I mean, this thing went up to what, $70? Yeah, $74 a share. Can it? Did it need multi-years to finally catch its price? And now it's starting to work up. It's found its flavor. So I'm all in. I like the way these candles get these green, it's getting large. I like everything about this monthly. I just hope it goes faster than this. Remember, this is a monthly. I want to see some ping, but it's been showing us in the chart, man. Somebody's buying this. Look at this. Let me go ahead and show you something. And if you watch me, you already have seen it. So let's go. Wow, there it is running. There it is, man. There it is. Let's go to the, is it the March? No, it's the January. The January 20. Let's close that. Let's come down here. And let's look. Oh, somebody closed their contracts. It was 171. Look at the open interest on these 17 January calls. The 70 strike. 170,000 on the open interest. Yeah. 14. It's going from 14 to 16 cents. Does somebody know something? Huh? Is there an insider? Just insider trading right here? Somebody bought a shitload of $14 calls, right? To try to, get it big. I mean, if somehow this reaches 70 by January, somebody knew something, and SEC needs to get involved. I'm just kidding. I'm just going to ride their coattails. Here's my position right here. I'm long the 42s, and let's see what happens. If this earnings does not go up, I'm out. It's just that simple. It's just not time yet. Netflix being one of the first of the fangs, tech stocks, and it's been bad. Even though Netflix is Netflix, okay? These other stocks ain't selling movies and charging for old subscriptions to watch Friends and things like that. No, they ain't doing that. These are totally different. So don't classify these market as like Netflix. It's not Netflix. That's what they realize right now. That's why Twitter's coming back. They say, oh, yeah, you know what? Twitter's not Netflix. Oh, yeah, buy it. So that's what's going on. Look at the open interest down there. Look at the open interest in March. The next one, it's probably none, right? Look at the Januaries. Holy cow, wait a minute. Yeah, okay, I'm just now discovering this live right here. Look what is going on with January. Okay, look at the open interest for December, all right? That's normal right there. Look at January. Look at that. All the way through all of it. Right? Look at the next month. Nothing. Somebody, 1,000. I bet you they bought that for 1,000 shares. Anyway, somebody sold it. Anyway, look at here we go. So that's December, right? Let's look at December. Wait a minute, just did that. That's December. That's the January. Okay, here's December. Let's look at September. Yeah, kind of normal. Still a little heavy, right? Still a little heavy, but kind of normal there. Let's look at August. Look at that. Holy, nothing going on. Okay, so whatever's going to happen ain't going to happen before August. Okay, let's look at the other August. Yeah, nothing really. Let's look at another August. Actually, it's kind of heavy right there. Let me see what is that January. Applied volatility is not even really that high. Let's look at, damn, there's a whole shitload of Augusts. That many? Wait a minute. How many? Look, it's 1, 2, 3, 4. Okay, it's 5 weeks in August. Yeah, these are all normal. Pull up to July. And this one should be, wait, this is when they report. It's not really a lot going on there. But you can't tell me this January something ain't going on with the Twitter. Okay? Look at that action. Look at the put side even. I don't know. Somebody tell me what it is. But right there, 170,000 at the 14.16. You think they sold that? Hell, I wouldn't sell that. Because suppose somebody comes out and buys it for $80 a share. So I wouldn't sell that. Anyway, somebody bought those, right? Somebody had to sell them. Anyway, it's a lot of positioning right there. But look at all that, man. So, hey, you heard it right here first. So I'm in right there. And I like the way the chart looks. So, this is the best. This is going to be my best trade, hopefully. Gold. All right. I got suck it out. Remember that? I told you about it. Bought in, made all that profit, kind of gave some of it, damn near all of it back. I need to get back in. It's the bottom line. Gold is going higher, and it's hardly no resistance here on some right there. It could possibly test the all-time high. It could possibly run up there. It broke out, and so far that's the monthly. Let's look at, and so far it's doing its thing, man. It's holding on. It even wants to go. Look at that. So this is for real. Look at the volume on the breakout. It's for real. And I need to get on board. So I was in, I was out, and I need to get back in. I said I was going to concentrate on, condors and things like that. I might have to do calls on here. Big call spreads like the 120, 130, 150 all the way into December, something like that. 130, 140. Yeah, I like that. Let me turn this around. Okay, Periscope kind of got cockeyed. So Cashmatic, what is up? I'm learning more about the iron condors and vertical spreads. Yeah, I'm trying. I know all about them. Like, I'm just trying to trade them more. They're excellent trades to do, but very slow motion. You can do, and I guess I need a little bit more excitement, but that's not how you should play it. I want to play it. I need to slow down and make these profits. Like today, all my iron condors are profitable. I got one on the Qs. I sold the 199, 130. I sold 30 of them, and it's about to be full profit. I sold it way where I said. I'm up here, and with this week, I guess, coming down, because I need to pull up the days. Yeah, it's starting to be profitable. I don't think it's going to, at the Netflix, I just don't think we're going to get up there. I even moved so I sold 30 of them it would have been a $600 profit for full max loss, max gain $600. I was only looking to make $300, but I lowered so I sold them for 20, right? 20, yeah, sold them for 20. I was going to buy it back for 10 cents. I moved it down to 8. Let's make a little bit more money on that. I shouldn't, but there's no way the Qs are going to go back up, and be at all-time highs, leaving Netflix around, and, Twitter's taking it on the chin, all the big ones, Facebook. Look at that. Facebook's still going down today. Google, for the Qs to make highs like that, these stocks need to participate, and they're just not. They're just going down. How's your trading when you're driving for Schneider? I was doing Oh, my leap vertical strategy, where I was like, okay, like let's say here, what is we looking at? Google. All right, so it's an excellent way, man. It's excellent. Okay, you just gotta buy stocks that are going up, that you know is gonna go higher. So here we are. What are we at? 1,134, and I'll just pull up the option chain and come way out here, man, to 700, 2 years. Okay, maybe we could do this year and a half. Let's do the year and a half. But I would do the 2 year. Look, see, I got right there. I got a position on right now. The 165 sold the 1170s to 1165. Let's see what that looks like. Shoot, I got a bunch of positions on. Right here. There we go. I sold it for 270 and gonna make 230. Okay. It takes 2 years, and all I'm saying is, you know what? In 2 years from now, it's gonna be above 1170. 2 years from now. Okay. So let's go back to that analyze. Let's see if I can explain this a little better. Let me take me off. All right. So basically, right, I sold it for 270. With the so basically I got risk 270, right? I'm trying to make 230. Okay, so 270. So, and I'm trying to make 230. Yeah, divided by 230. I got to figure out, why can't I do the math here? I do it all the time. Got my calculator right here on the desk. 270, basically, let's put it, it's about 90% profit. Okay, I'm about to make 90%. I'm risking 270 to make 230. I'm just going to go ahead and call it 90%. All right. That's 2 years though. So what is that? That's about 50% a year. Okay, I took $270 and I'm going to make 50% a year on it, right? 2 years from now, as long as Google's above 1170, what is the chance of that, right? What is the chance of that? Pretty damn good. Okay, now, if it doesn't, I lose 270, but if it doesn't, I'm not going to lose the whole thing. I'm going to get out before that. You'll be able to know come 6 months before that, or, in that area. And then you could get out and salvage a little bit of that money. It won't be a total loss. But unless it's like trading at 700 or something like that. So that's the trades I had those trades on leap verticals. I do verticals on leaps, and I had it on maybe 10 positions or so. And I keep building them. I keep buying those kind of positions. I got some on Amazon right now. And you don't have to check your portfolio every day. You don't have to worry about the ups and downs. All you got to do is just wait 2 years from now and collect that money. We can look at Amazon. Y'all gonna be like, and you're gonna know why I make so much in Amazon. I'm not making it today though. Oh man, let's go here. Let's go here to the trade grid, to the option chain, and you look down here, and you see like January 21, right? That's a year and about a year and a half away. Look what these are already in the money. It's a call spread, right? The 1730, 1720, 1730 call spread. I think I bought that for $400. So of course, once that time reaches, I doubled my money. It'll be more than a double. Okay. That's that position. And I think I got a couple of positions on that. Oh no, I'm losing the Periscope. You can see here, June 18, June 21. Yeah, my phone just died. I sold the 1720, 1700 call spread. That's making money already. So basically, as long as it's above 1720 in 2 years from now, I will have doubled my money. So I'm making 50% basically a year on that trade. And then over here, now this is the riskier one. I got a call spread. I own a 2,500 to 2,600 call spread. All right, so I bought that. That's $100 spread right there. Okay, so I bought that for, What did I bought those for? I think two, 3,000 a piece or something like that. And remember, it doesn't have to get there. When you do things like that, it doesn't have to get there. Look at the open interest over here. It doesn't have to get there. All it has to do is head that way. Just guys keep going up, and these positions are making money. All right, so if I look at the analyze, see, we have to get rid of the stuff that I'm looking at today. Let's pull up. Here's my 2,500, 2,600 calls. Let me spread it out. So right there, I got 12,000 basically risking. I'm risking 12,000. If this thing is above 2,600 in 2 years, I'm up $47,000. I will make 47,000. Thank you, Jeff Bezos. Okay, so that's what I'm risking. Okay, I'm just buying the way out. You know what I mean? And like I said, if it doesn't go up there, well, I lose $12,000. But for me to make this money, to make it profitable, I just need it to continue to slowly grind its way up. Okay, and few good earnings reports, it'll be there in no time. You know, this is a 2-year position. All right, so that's that one. And then this one is the 1,700 to 1,720 put spread. This one is already in the money because Amazon is trading at 1958. Right, I risked $1,000, okay, and I'm gonna make 1,000, right? So that's 100% of my money, 100%, a year and a half. So that's about, it takes a year and a half to make 100%. If you would have, if you did that with 7% interest, rule 7, it'd be like 7 years to make 100%. This would be 2 years, 100%, man. I need it to be over 1,700. Well, it's already at 1,900, so this trade is looking really good, okay? It's looking really, really good as long as it don't have some massive collapse or Jeff Bezos is screwing kids or something like that. You know, I think I'll be all right. Think I'll be all right on that one. And most likely I don't let these expire until, I'll get out earlier and redeploy. So I might get out after 750, after I realize 750, 700, and then redeploy, buy it again, kind of look at Amazon and say, hey man, is this thing still going up? And then buy it again for another 2-3 years out. And that's what I kind of do. So I keep flipping those positions. This one is the January 15th, another 1720. I bought one of these live on the screen, if you remember, when Amazon was trading at really low. So I paid $447. This is a call spread, and I'm going to make $553. Right? So that's over 100%. And guess what? I just needed to be over 1730 by January 21, and it's already at 1900. It's already. So if you look at it, this position, it's right here. I'll tell you, it's up $270. I forgot my open. It's right here. It tells you what these positions are up. So let's look at them. Let's look at this one right here. This one is up $1,233. So another $45,000 to go on that one. This one is up $300. Okay. Remember, I'm not trading these every day. I just put them on and set it and forget it. This one, so I'm heavily invested in it. That's the only thing bad. I'm heavily invested in Amazon, but it's the best thing going. They keep growing. They keep innovating. They build a new headquarters. They fly in drones. They fly in planes. If the government breaks them up, that could be a danger, but I think they'll be more powerful even. This one, January 21, 447. You can see I'm up 257 on that. And I got some September 20s. Yeah, the 1660. I sold the 1660, 1760 put spread. Okay, I sold that for $5,614 to make $4,386. I'm already up $1,239 on that. I did that when Amazon got crushed, when it was down there in the gutter. Right, when it was way down here and whatnot, put those trades on. So guess what? It's already in the money. Yeah, so that's that one, right? And just that could expire worthless, you know? I lose money when it reaches shoot, I done lost it. 1760. I'm going to lose. Well, it's already at 1900. Yeah, I've got another year for that one. June. Here's the June. Here's one in June, right? So I paid $16.19 to make $13.81, and that is the 1980-2000 call spread. So call spread on that one. So it didn't quite reach 2000. This one's up 368. I lost a lot of money on this one over the last couple of days. I think this one was over 1,000 or something. No, not over. I don't know. It was doing well. But so that's that one. Then I got some of these short terms. What's this one? 17 January 20. Let's look at it. So 1380. I'm risking to make 1620. These are the riskier trades, okay? So I need this one to be above 1975. So it's the 1970-1975 call spread. As long as it's above 1975, by January 20, I'll make the whole 1620. Right now, that position's up $180. See, look at this fluctuating. So there you have it, man. I hope that helped. And that's what I did when I was driving trucks. It works well. It's the secret sauce, man. It's the secret sauce. So I did it for Microsoft stocks. You want stocks that are doing this, stocks that are just going up. Now, when you have one of the massive pullbacks, a big sell-off, these positions will get crushed, okay? But that's when you need to put them on. And remember, you don't necessarily have to take them off. Just get crushed in them because you got 2 years for it to come back, you know? And that's why you want to roll out. That's why you don't want to wait, because if there's any kind of collapse, you need that time to get for the stock to get back up there. So if you could make half of those, like that one that said 47,000, if I can make 23,000, I'll sell it and then redeploy it. You know, give me more time, and I just keep doing that, right? And it's been working like a charm, man. I need to write a book on that. So that's my strategy. I don't have to trade every day, and I do this stuff. I'm making videos and I trade a portion of it, and when I see things get crushed, I haven't been putting a lot of positions on lately because there's instability in the market since last October. So I took a lot of those positions up, but when things are getting crushed, is a time to look at it. One of the stocks to do something similar is CXX right now. I mean, it's getting crushed. I mean, it's the railroad business. It's gonna be all right. It's gonna be all right. You know, so that's a stock to possibly do it on. You could even do it on an index like the Russell. Like it's, you know, look at the purple line since 2009, right? That's when the stock crossed above it, and now we're kind of hanging around it. So we here, and these were the time to put on such a trade. You know, and we're just slightly above that. So maybe, right? You can put on a trade like that. You just got to find things that are that Twitter would be perfect. I think Twitter will get its butt together by the year 2021. Remember, that's when you can buy these things for, right? And you put it on trade. You say, you sell the, I don't know, let's say to sell the 35.30, right? And it's already in the money. And you might have to, you might pay, what is it, the 35? I'm all confused. What is this trading at? 37. Yeah, you could buy the call spread to 35.30, the 30.35. You might pay $3 for it, more than half, but it's already, the probability of success on that is huge. You know, just already in the money. You're talking about 2 years from now? I think Twitter can stay above that. Twitter almost got to show and prove, though. I think it's doing it. You know, look at, I mean, it's been going up for the last almost 2.5 years, right? So say the bottom is over there. About the last 2.5 years, it's been going up. So I think this one goes higher. That's why I said this might be my all-time best trade, and I'm in it on those January calls. You know, and I don't generally buy calls. Okay, so I would buy those spreads if Twitter didn't doesn't have a great earnings report or something, I might let it tank. I might sell all those and then do those call spreads and just be patient with it. What do you think, Cashmatic? What do you think of that? But that's what I do, man. That's how I was trading on the truck. And you don't have to look at the market every day. You want to go higher, but if it goes lower, it's okay. Come wake me up 2 years from now and tell me how the market's doing. That was my attitude, and it works. It's not excitement. Nobody's gonna teach it. There's no excitement there, but you watch it. You watch your portfolio. So like when I was showing you those, remember I think I showed y'all a day I was up 5,000, 7,000, something like that. That's those positions putting that kind of profit on my bottom line for the day. That was those deep in the money calls. That's what was doing that. Not anything I was day trading or swing trading. It was those positions. And sometimes now it happens on the other way around, man. You'll be down $5,000 easy, but it comes back, Anyway, that's what I do. And you can start small. Those are just lots of contracts and stuff. You can start small, $250, $250. If you were to put $250 in a bank 2 years from now at 1% interest, so you'll get $2 a year. So 2 years from now, you'll get $254. So you can see where I'm going. So it's okay to just take that $250, buy the spread 2 years from now, and then you know what? 2 years from now, you getting back $350, $400, right? Can't beat that. All right, so yeah, that's my style. That is my total trading style. Just let out the secret sauce. What you see me now swing trade, this is not what I really do all the time, but it works. It's been working. And it's just more activity, so I can talk about stocks and trade. But that's the bread and butter, man. That's what I do. Yeah, and then maybe a little bit for this, So look at the volume right here. Look at the volume here, right? Compared to here. You could see the volume average. This is Twitter. I don't know why my volume average. See that line? That's my volume average. Let's see that line right there. Close that out too. I don't know why it's not drawn over here, but you could see how damn near. Look at the volume coming into Twitter above average, right? Now it's going down, which is a good thing because this is the handle, right? And on a handle of a cup and handle, you don't want that much volume. You want it to kind of come down because that's what's going to give you the pop, right? So I don't know what's going to pop it, but very nice long-term chart. Yeah, so all right. Yeah, there it is. Yeah, go back to me. Let's see how many people I got here. Yeah, just one. All right, so this video has been an hour long. I'm sorry I didn't make a video yesterday. I was tired. Yeah, I was doing double duty. But I made one today, and I'll try to make one tomorrow. Hopefully Netflix can. Well, I don't know. I got to try to put on, and I could be bearish like that's trade that's gonna show you. That's why I was looked out farther, and I want to put on maybe a long-term put spread on Netflix. I just don't think it has a. I just don't think there's a turnaround story anywhere in sight. It's a go broke story. They keep paying everybody to make these movies. You know what? We stopped watching the movies, and you got to keep paying people to make money. Like say Star Wars. They don't have to keep Disney paying people to sell Star Wars. Now, every once in a while, they make a new Star Wars movie, and then guess what? It's the best movie of all time, and then it has so much run, and then it runs in its parks, and it runs in the the merchandise and all of that stuff, all of it. But when Netflix makes a movie, it's just run, you watch, you're done. There's no merch. You know what I mean? They might be selling a little merch. There's no rides and things, and there's none of that stuff. And that's why Disney, nobody does it better than Disney. Nobody. So when they make a movie, it's stay in power. And now the only way to watch these movies is you go over there. And I'm pretty sure that Endgame, right? Is that the best movie of all time? Did it break the record? That's what's going to launch that whole Disney Plus. They're probably going to have the Endgame, all that stuff, the Star Wars, the Endgame. They're going to advertise it hard, and it's only going to be $6.99, not $14.99 like Netflix and Friends. Nobody's watching that crap anyway. The Office. My daughter showed me some episodes of The Office. I like it. I want to watch some more of that. So wherever it's going, I'm going to have to sign up for that. All right, that's it. So I am done here. Thanks for watching. I appreciate it, and hopefully I'll be back tomorrow. You know where to find me. Like I said, put things in the comments, and I'll get with you in the next video. So thanks for watching. This is Dre, and I'm out.